screen when I need to, because I don't even know how to do that. Oh wait, is it down here?
All right, good afternoon, everyone. Welcome to tonight's Ask the Expert session. I have Teresa Pastor that's going to be joining me this evening, and I am super excited about that because she is a Unicorn Squad member and also a real estate agent that has been absolutely amazing in her area. And I'm going to tell you a little bit more about her. But first, before we get talking and start our conversation, I just want to recognize all of you for joining us on this Sunday. I know a lot of people are out celebrating Super Bowl Sunday, eating lots of chips and dip, all the good finger foods, and just enjoying a really good game and good people. But you all chose to kind of jump in and focus on your finances today. So extra kudos points to you all that are joining us this evening. So before we get started, just want to let you guys know that we're just super excited to have you. Tell us where you're from, tell us if you're new, and then we'll go ahead and get this session started on the hidden cost of home buying. And then also I just want to make sure you all can hear me clearly and all of that. So I'm just going to wait till I hear someone say, yes, we can hear you, and then we'll go ahead and get this started. All right. Points. There's a little feedback there. All right, perfect. Someone said they can hear me. So I'm going to go ahead and introduce Teresa to you all formally. So Teresa Pastor was born in Long Beach, California, and she has been an entrepreneur since the age of 10 years old, where she sold 3,000 boxes of Girl Scout cookies in one season. Girl, I wish someone would come to my door right now and sell me some Girl Scout cookies. I love those. I think we're all guilty of loving some Girl Scout cookies. Automatic distraction for me. At the young of age 19, she embarked on her first business venture, and she attended colleges in Lafayette, Louisiana, earning her bachelor's degree in industrial design and later an MBA. And she, since 2009, has been ready to invest in real estate. She acquired her real estate license in the middle of the economic crash. She became a certified in distressed properties and became a top salesperson at her company. And in 2015, she took another leap to assist in opening a new real estate and brokerage company and became a real estate broker as well. And Teresa is currently an associate real estate broker for District South Real Estate Company, which currently holds the record for the most sales per agent in that area. And Teresa is also the owner of Lead Boss Digital Marketing Agency, which allows her to provide exceptionally creative marketing for her real estate clients, as well as for other business niches. And that is why she is here. That is why she has also helped us with Literature Academy. And we know her level of excellence and we know her level of expertise. And as soon as we found out how amazing she was, we said we have to share her with the Literature Academy audience and the Dream Builders. So excuse us both. We're actually both sick today.
Yeah.
You might hear us a little stuffy and congested a little bit. And I'm sorry if anyone else is sick joining. I know there's all kinds of bugs going around right now, but we are going to make it through. So welcome, Teresa. Thank you for coming for tonight's session.
Hi, thank you so much. You make me sound so wonderful. And that whole spiel, it sounded pretty fantastic. So yeah, I'm going to be talking about the hidden cost of home buying. There's a lot of different things in the home buying process that people don't realize could potentially pop up. And I just want everybody to kind of be prepared in the home buying process, you know, for any hiccups that might come along, for funds that they might need, and just to be super, you know, to have a savings before you even start. So that's what I'm going to talk about today. Pretty simple. I guess I'm going to go ahead and share my screen so that we can, you know, just get started right away. Let's see if this works, because I don't know.
Technology is usually good to us, but sometimes you never know. I'm pretty sure it's going to work in our favor tonight.
Okay, let's see what happens. Can you see that? Perfect. Okay, there we go. And I can, all right, good deal. Looks good. Okay, so she kind of gave you a little bit of background about me already. I've always been super entrepreneurial spirited since I was really small. So really, it wasn't really surprising that I would end up in something like this. But yeah, she kind of gave you my background already. And just to give you a little bit of, you know, background in my expertise with real estate, I've been in real estate for over 10 years. And I've been a broker for over 5 years. I was at one point a real estate coach. and the assistant team leader for Keller Williams Realty Acadiana here in Lafayette. And what I did was I would help agents, like the 40 newest agents, because there was like 300 agents there, to get rolling in real estate and stuff like that. So teaching is definitely a passion of mine. And then also the marketing that I've started to learn, I guess within the last 3 years, just taking marketing courses on top of everything that I'm doing to help out my real estate business as well. It really, really helps to sell houses and makes a huge difference in business. My personal opinion is that if you know marketing, then you can sell anything. You can do any business and do it well, because it's all about the marketing, right? So let's see. I'm gonna press a button and hope that it works. Here we go. All right. So that's my crew right there. Just a little personal information about me. I'm a single mom to 6 people. The second one to the left is actually an addition. I always have an extra kid in my house. She's been with me for about a year, but they're all super, super talented. And they're the reason that I'm in real estate, because real estate allows for me to be super flexible and also to make good money in order to, survive with all these kids. And then there's my proud picture of me and Tiffany when we first met. I met her in, I think, Harlem last year, and she's just an incredible person. The whole crew is just so kind and just so amazing. And so, yeah, when I met her, I asked for a mentor and she didn't hesitate. And so here I am. That's how I ended up working with the Budgetnista. So yeah, so I really believe that, we all have a lot of strength within us, and that we can absolutely do anything we want. We just have to believe that we can. So I always like to, encourage people and, hey, you can do whatever you want. If I can raise 6 kids by myself, you can do anything, I promise.
Yes, hats off to you. I have 2. I don't know how you're doing. You're already like Wonder Woman to me.
It's my schedule. It's all about the schedule. Okay, let's see. Let's get rolling. Okay, so yeah, this is going to just kind of be an outline real quick. We're going to be talking about the pre-approval process, the reserve funds that you'll need in order to get a pre-approval, some of the inspection costs that come up, the appraisal costs, add-ons, like things that you can, additional things that you can add on to the process, or like warranties and things like that, potential moving costs, my recommendations to you, and then just some information on where to find me if you ever have more questions, if you want me to do more videos, because I really love doing them. So here we go. Okay, so in the pre-approval process, the very first thing the very first fee that might pop up is the application fee. The majority of lenders will automatically include this in the closing costs. They won't charge you for it up front, but there are some lenders who will charge you for this fee up front. And the reason that they might do that is if they feel like maybe your credit isn't quite up to par, and they know that they're about to incur an expense and not necessarily, be able to complete the loan, they may charge you up front. And that fee can be anywhere from $30 to $80. It's not typical, but it does happen from time to time. So, just something to be aware of whenever you're going to apply for a loan. Your earnest money deposit. You will need to have some money saved for a deposit whenever you make an offer on a house. So anytime that you make an offer on the house, the seller is going to expect that you put some money down, just, as a deposit, just basically saying, hey, I am, serious about buying this house. And typically, at least in Louisiana, the price can run anywhere from, $500 to $2,000. Very typically here on an average cost house, it's about $1,000. But here, and I don't know where you are in the world, the average cost of a house, or the average house price right now, is about $175,000 to $185,000. So that's what we're dealing with whenever. So if it's a lower price house, like maybe an investment property, I've seen deposits as low as $250. But if it's a higher price house, over 300,000, say, then I'll see, deposits that are $2,000 or more. And I really know that every single state and every single area is different. So it's really important to be in communication with a real estate agent about what the trends are for your area, because that's definitely, very specific to where you are. Closing costs. This is pretty standard across the board. I don't think that this is one that will vary from area to area. Closing costs typically run between $5,000 and $6,000. Now, the buyer is technically responsible for the $5,000 or $6,000 for closing costs. And what the closing costs include is things like your mortgage fees, the title fees, for the title company to do all the work that they have to do, recording fees, taxes, a first year of insurance, all those things are included in your closing costs. However, the trend here, and I don't know what the trend is where you are, but the trend here in Louisiana right now is that the buyer almost always asks the seller to pay closing costs. That's just what they do. And whether or not they do, it's just like one of the things they throw out there in the beginning. So most sellers expect that they're going to pay all or some of the closing costs in the process. So sometimes it kind of, cuts that price down for the buyer. And if you don't have your closing costs, here at least, you just go in saying, hey, I don't have closing costs. So, you're telling your realtor, I'm going to have the seller pay for closing costs. So pretty simple. If you don't have it, you just have to find a seller that's willing to pay for it. So it's something you can definitely get around. Okay, so your down payment, that's another thing that you're going to want to save for. Depending on the type of loan that you have, you can get away with anywhere from no money down to 20% down, or even more than that if you are so diligently saving your money and listening to Tiffany and putting everything away, and you have a big down payment, which is obviously better for you. But you can get away with nothing down all the way up to whatever you want to put down. So there are certain types of loans like rural development. Out here, outside of the city limits, we have 100% financing loans. And I'm sure there are similar things in other states as well. But on those types of loans, you don't have to put any money down. And then I know that there's also some kind of affordable housing loans as well that might have a similar situation where you don't have to put any money down. And then, of course, you have your FHA loans that are 3.5% down, and then conventional loans start at 5% down, and then you can just go up from there. Of course, you're going to pay private mortgage insurance if you're not paying the full down payment on the conventional loan. And then reserve funds. Sometimes the lender will expect that you have 1 month to 6 months of your note in savings before you're able to put an offer on a house. I don't see this terribly often, but I have seen it in some loans that I guess are geared more towards people with either lower income or lower credit score. They'll work with you, but then they also expect you to have some reserve in the event that you lose a job or something along those lines. So that's that for that section. Any questions now, or should we keep them to the end?
Yes, we have quite a few actually.
Good, awesome.
Yeah, I'm gonna jump in and start asking a few of those. So variety of topics here, but still kind of on topic. So Marilyn wants to know, and this is kind of from your intro when I was introducing you. She wants to know the difference between a real estate agent and a broker.
Okay, so when you first get your real estate license, you're a real estate agent. Okay. You have to be a real estate agent for about 4 years. In Louisiana, it's 4 years. It may be different in other states. Once you've been a real estate agent for 4 years, then you go back to school, you take a harder test that's almost the same as the first test you took. It just has more legal questions involved. And then you're a broker. A broker, what we're allowed to do is actually work over real estate agents. So if you're a real estate agent, you can't work at all unless you're under a broker, if that makes sense. So I can work over real estate agents, and I can also sign more legal documents and things like that that real estate agents wouldn't normally be able to sign. And I can also answer legal questions about real estate that most real estate agents wouldn't be able to answer, if that makes sense.
That makes perfect sense. Thank you. And Marilyn, if you have any more questions about that, let us know. Alina wants to know, are lenders typically a bank?
A bank? Yes. Okay, that's a great question. And I'm actually going to talk a little bit more about that in the end.
Okay.
So but it's a good question. So I'll go ahead and answer. So basically what I see or how I divide them out is you have a bank like Chase or like one of your small local banks. Like here we have Iberia Bank, like, the small little local ones. Then you have your lenders and then you have your brokers. So the bank, they have the basic products. They'll have, your basic conventional loan and your RD loan and your FHA loan, and they'll have like the few basic loans, or maybe even they might even have a construction loan for new construction, but it's just their products. That's all they sell. Same thing with a lender. So we have lenders here like GMFS. I'm trying to think of some other ones that are that might be more prominent nationally, but basically the same thing. They're not a bank, you can't walk in and cash a check, but it's a lender, and they're the same thing. It's just like the mortgage part of the bank taken out into their own business. So they have their loans. That's it. That's all they have is their loans. The basic loans, and it's all either in house or their own investors or whatever. Then you have a real estate, a mortgage broker. I'm sorry. And this is what I tell everybody: go to a mortgage broker first. Unless you have like a really great relationship with your bank, you've saved money all your life, you have excellent credit, and you're not going to have any issues, you can still go to your bank. But a mortgage broker, what's wonderful about them is that you can go to them one time. You can pull your credit one time, and they have access to all the banks or a majority, bunch of banks. So they can look at your financial situation, they can look at your credit score, everything, and they can go, okay, this bank is going to give you the best rate, the best thing, the best for your money, the best everything for you. That way you're only pulling your credit one time. If you go to a lender or a bank, they might refuse you, and then you got to go to another one and another one and another one. So I hope that makes sense. I prefer the broker so people don't have to pull their credit multiple times. So I hope that helps a little bit.
Perfect. And we have two more, and then we'll jump right back into it.
Okay.
Belle, she wants to know, if the seller refuses to pay closing costs, can you get your earnest money back?
Absolutely. Yes. Up until, so you have a period. Okay. So once you put an offer in, it's accepted, you have a due diligence period, say of 10 to 15 days. All the way to the end of that period, you can get your deposit back. After that period is over, if you say lost a job or couldn't get financing, you can also get your deposit back. The only time that you wouldn't get your deposit back is if you've gotten through that inspection period and then you randomly just said, you know what, I don't want that house. Okay, then you would lose your deposit. But yes, up until the end of that inspection period, you can get it back for sure. In fact, you probably wouldn't even you wouldn't even give them a deposit, because you wouldn't get past the point of putting in an offer. Like it would kind of die out, because once the offer is accepted by both parties, that's when you give your deposit. So maybe that's a better answer.
Oh, that's perfect. That's a perfect answer. And
Okay.
actually, I'm going to hold the other questions because I think you're going to address them throughout.
Okay. Okay.
Jump right into it.
Good deal. All right, here we go. Inspection costs. This is where, this is what I was talking about. So once you make an offer on a house, you and the seller agree on a price, that's when your inspection period begins. Typically, an inspection period is about 10 to 15 days. It trends, I think, probably in different areas. For me, I'm like 10 days. Let's get it done. I want to get it done quick so we can get the inspections back to the bank, tell them to order the appraisal. Let's go. Like, I'm ready. Some people, they want a little more time. That's fine. Whatever you like. So the very first inspection that you're going to do, and if you do nothing else in this process, if you pay for nothing else in this process, I absolutely recommend that you pay for a home inspection. So your agent will typically have a couple of home inspectors that they can recommend to you. And a home inspection is going to cost you about $350 to $500. But what they're going to do is they're going to go from roof to foundation. If it's on piers, they'll get under the house. They're going to go all through the house, and they're going to tell you absolutely every single thing that is wrong with that house. Now, unless it's behind a wall and they can't see it, they're going to tell you absolutely everything that they can tell you about that house. So it's worth it. It will save you money in the long run if you have this done. so that you don't find out later that you have issues you weren't aware of. So to me, like, this is the one thing that I absolutely am adamant about you paying for. And if you don't have the money to do this, well, you probably don't need to be buying a house, number one. But if you wanted to save money, let's just say you had like a dad or a cousin, whatever, that's a contractor. You want them to go through the house and look at it for you. That would be okay, you know, but make sure somebody that knows what they're doing. You know what I mean? For sure. So sometimes when you have the home inspection done, the home inspector will say, you know, the roof looks a little shoddy, or, you know, the foundation isn't, you know, quite right, or there's cracks in the brick or whatever. And they may ask you to go, or recommend for you to go and have additional inspections done. So a roof inspection probably costs you about $150. But a lot of times roofers will just go out and give you a quote for free. So sometimes you can get away with not paying for it. Foundation inspection, definitely at least $150. And if you want a report from the foundation inspector, he's going to charge you like another $250 to type it up and to draw it out and to do the whole thing. Electrical, yeah, I mean, if there's some kind of electrical issue, about $150. Same thing for the pool guy to come out, you know, check out your pumps and everything, make sure everything's running right, about $150. So again, being in the country, we have septics a lot. I don't know if y'all have septics where you are, but when you're outside of city limits, a lot of times there's no sewage service to the houses. So we have septic systems, and on a lot of these country houses that have acreage and stuff like that. And in a lot of these parishes, we have parishes, not counties. I'll say counties. In a lot of these, they will require that the septic be inspected, that it be pumped out. So I always joke that you have to take your poop when you go. And then they want it to be under contract to make sure that it's in functioning order and that the septic people are coming out on a regular basis to check it out. But that will cost you about $400 to $500 typically. And what ideally the seller would pay for that before they even list the house, ideally. But sometimes they don't. Sometimes they don't have the money. But a lot of times these parishes / counties won't let you even turn the electricity on until they know this is done, because they want to make sure that it's not a health code violation, or that there's not something wrong with it, because that could be really bad if you have sewage in your yard or something wrong with that. So, and then same thing with well water, which I don't see very often. Very, very rarely do I see a well, but well water inspection, about $75 to $150. Engineer foundation certification. So on FHA loans, if you are buying a mobile home, and out here they're very popular because, you know, they're very affordable, so you can buy land and you can put a mobile home on it. But in order for FHA to approve a mobile home, they want a foundation certificate done by an engineer. And so they'll go out and they'll make sure that the house is on cement runners and that the house is tied down with metal straps and these big giant screws that go down into the ground and into the cement, so that this structure is tied down to the ground. But that inspection costs about $500 on average. And you have to do it if you're getting an FHA loan, so that could potentially be an extra expense. Elevation certificate. Where I am, we have a lot of flooding. Because we're so far down south that we have flood zones down here. And so they, you know, the elevation certificates tell us how high the houses are, and they tell the insurance companies how much to charge us for insurance, for flood insurance and stuff like that. So an elevation certificate can be $350 to $500. It's basically a survey of your house to tell the bank and to tell the insurance agent how high above or below the base flood level you are, which isn't really good sometimes. It can be bad. You can have some really high insurance. And a flood certification is basically just the actual document that says, that says exactly what it is, or if your house is in a flood zone. That can be about $10 to $15. Okay, survey. We don't see that terribly often, but if you are, say, like on acreage and it hasn't been surveyed in years, and there was a succession and Meemaw passed down the house to, cousins, uncle, brother, and they have no idea where the property line is. Well, a survey may have to happen. Typically, again, the seller would pay for their own survey because it's their land, but sometimes they don't have the money to do it. And sometimes you get stuck with it. An average survey is about $400. But if you're talking about acreage, like a lot of acreage, it can be up to $1,500. But I mean, most people aren't buying that. First time home buyers certainly aren't buying 15, 20 acres, but it's an expense that could potentially pop up. So, just something to keep in mind. Do we have any questions on this one?
Yeah, absolutely. This is amazing to know, and I hope you guys are taking notes or taking screenshots, because you kind of get a good ballpark of where these expenses and fees are going to come from and when. We did have a question about brand new homes that are being built from the ground up. Do you still need a home inspection on those?
Okay, so you kind of do. I would still recommend it, and here's why. Because sometimes builders miss things. Nobody is perfect. Typically builders have warranties. So if you really just could not afford it, then it would be okay. Now there are some big name builders like DR Horton, DSLD. They have their own inspectors, and they will go in and inspect the house for you for free before they close, just to make sure that everything is lined up the way that it's supposed to be and that everything is in order. However, you also have to consider that this may potentially be a biased opinion because they work for that company. So, it's up to you, really. If I was buying a new construction home and I went through it and everything looked pretty good to me, and the inspector went out, I think I'd probably be okay with using their inspector. But just keep in mind that they may be biased because they're working for them. And sometimes if I don't know the builder, I'm gonna get an inspection because you just don't know. Some of these guys are throwing up houses quick, cheap. You don't know. You don't know. If it's a big name builder, obviously they typically have a better reputation. If it's a smaller builder that nobody knows, well, it could just be Joe Blow that decided to get his contractor's license. But even on some of these big name builders, we've seen entire neighborhoods that had issues with like sheetrock mold or just random little things because they also hire subs to do the work. So it's not necessarily them going out to do the work. They'll hire people from here, there, and everywhere to do the work. So just use your best judgment. But I would still have the house inspected by somebody, you know what I mean? Just in case.
It's definitely a personal decision. And like you said, you just never know. So it's better safe than sorry. $500 compared to tens of thousands of dollars and all kinds of issues can be a lifesaver. So I say just do it. All right, we do have a few questions pouring in here, so I'm going to go ahead and jump into it. You guys are so engaged tonight. You always are, but I am loving these. These are really great questions. Yes. All right, Lena wants to know, would you recommend an inspection on a condo or co-op?
Yes, of course. Yeah, definitely. It's no different than a regular house. The only thing that the condo typically, like the insurance that the condo association covers, but is basically your exterior, like the exterior of your house and your roof. And sometimes they're not well kept, to be quite honest. Even though it's a condo association, doesn't necessarily mean they're doing everything that they're supposed to be doing. So yeah, I would still definitely recommend that for sure.
Thank you. So, it just sounds very consistent. Get the home inspection, y'all. $350 to $500. And I think more than like you said, this is one of the most important hidden costs that you should expect to pay that can help you in the long run. Maya wants to know, when in the process of buying the home do you get the inspection? And what if you get it and realize you don't want the home? You just want to walk away from it.
Okay, so you're gonna start the inspection period right after you and the seller agree. So you're gonna put in your offer, they might counter offer, and then y'all come to an agreement, and then the next day your inspection period starts. So if you wrote in, or if your realtor wrote in the contract 10 days, 12 days, make sure you kind of know that information, like when your inspection period ends, but you have all that time to inspect. And what I always recommend is get the inspector out right away. like ASAP, like right whenever it starts. That way, if the inspector says, hey, I see that your roof is missing shingles, or there's a little leak, the foundation's cracked a little bit, I see this issue with the electrical, and I really think you need to go and get, this other professional out to take a more, a closer look at it. Then you have all that time, that whole window to go and look. And yeah, I mean, definitely, absolutely. If you see something that's just too much for you to handle, or the seller isn't willing to fix, or it's just like something that would make you walk away, absolutely, you walk away during that inspection period. That's what it's for. And then you get your deposit back. Absolutely.
All right, and then just a follow-up question from Alina. She wants to know, is a seller open to negotiation when the inspection actually has issues? Have you seen that?
Yes, absolutely. So at the end of the inspection period, and by the way, because a lot of these questions are very common, I'm going to give you guys my website at the end of this video, or at the end of this call. And I have a video series on there, and it breaks down the entire buying process. So a lot of these questions, you can go and like watch my crazy little videos too, on like that answered the questions. Sorry, what was the question one more time? Because I just lost my train of thought when I was saying that.
Oh, no, you pretty much answered it. She just wanted to know, are sellers usually open for negotiation?
Oh, yes. Okay. So at the end of the inspection period, so say you've had all your inspections done, everything that you needed to do for the inspection. At the end of the inspection period, you're going to do a response to inspection. So your realtor is going to type up a response to inspection form and send it off to the seller and their agent. And there's you have like 4 options. One, you can ask the seller for repair. Definitely if there's major things that need to be done, you absolutely need to ask the seller to do it. If there's small little minor things that you can kind of do yourself, don't nitpick, because it's just going to aggravate them. You could ask for money back at closing. So like say, for instance, the seller might not have the money right now to give you to do some of the repairs, but maybe after closing, once they get their big check or whatever, they can give you a check back for the repairs. That's an option. Another option is to ask for a reduction in the sales price. I mean, if it really is worth asking for a reduction in the sales price for whatever the issue is, then you could do that as well. And then the last option is obviously to walk away completely. Now, keep in mind that some of the bigger issues that would come up, like say the roof is evidently leaking, okay? When an inspector when the appraiser comes in, they're going to note that on the appraiser, and they're going to send it to the bank. And a lot of times the bank will not close your loan until that repair is done. So the appraiser is yet another backup to make sure that the house is in working order and structurally sound and everything before you close. They're not necessarily going to let you close if there's major repairs that need to be done. Hope that answered.
You are answering all of our questions, okay? Like, we're getting our lives together here. Actually, Monique said, wow, thanks, Teresa. This is valuable information, and I'm taking major notes.
Good. Awesome.
I'm getting a lot out of this. And I do have 2 more questions.
Okay.
So Tara wants to know, how do you find brokers? Is there a list? Okay, this is kind of separate, but how do you find a list of brokers?
Mortgage brokers or real estate brokers?
Let's go with both.
Okay. If you're looking for a real estate agent or a real estate broker, and again, you can check out my video series for more detailed information, but like you could literally post on Facebook, who is your favorite real estate agent? You can get boom, 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 boom. Because there's so many real estate agents and so many real estate brokers out there. And, I would look through the list of names and go look at their reviews. Just see how many reviews they have, for one, like have they really been in business a long time, see what they say, that kind of thing. If you're talking about mortgage brokers, I would ask, and honestly, this is the truth. There are a lot of real estate agents, okay, this is our job, that don't know the difference between a mortgage lender and a mortgage broker. That I know that's bad, but it's true. So you could ask your agent, and if you have a good agent, they're gonna know the answer to that question. I'll tell you that if you ask me for a mortgage broker, then I'm gonna give you a list, because I have a list of mortgage brokers. But you could also just look it up. You could look it up online, and you could find some locally, and you can always pick up the phone and call and just say, hey, are you a mortgage lender or are you a mortgage broker? And that way, yeah, I mean, they should be able to answer that question pretty easily.
Perfect. And is there usually a higher cost with working with a real estate broker versus a real estate agent?
Nope. All the same. Nope. You just get extra, I guess you just get extra representation. Just somebody that's been in the business a long time and knows a lot.
All right, perfect. I'm going to wrap it up there. I see there are a few more questions, but we have many courses in the academy that are very specific to that. So I'm going to jump in so we can continue to focus on the hidden cost for home buying. And then as you guys are answering questions, I'll go ahead and drop the links to those other courses. And then again, Teresa might cover some of this in tonight's lesson. So I'll keep you guys posted. All right, let's get back into it.
Here we go. Let's see what we have next. Okay, appraisal costs. So after you've gotten through your inspection period and everybody has agreed, the seller has agreed to make whatever repairs you requested that they make, then you get to go, or your real estate agent really goes back to the lender and says, listen, we've gotten through inspections, we've negotiated repairs, we're ready for the appraisal. We don't ever order the appraisal before that, because if we don't get through the, the inspections, like if the seller isn't agreeable upon the repairs, then we're not going to move, we're not going to go any farther than that. We're not going to spend any more money. But obviously every bank requires an appraisal. They're going to send they have a list of appraisers that they have to send out. We can't choose them by law. It's, just so it goes round robin. So there's no bias involved or whatever. And they usually run around $400 to $450, to $550. Now, here's the thing. Typically, they're included in your closing costs, typically. But sometimes there are ones that will ask for it up front. They'll ask you to pay for it with a credit card or whatever prior to sending out the appraiser. I have seen it. And, I want to say it's about 25% of mortgage lenders or mortgage brokers that'll do that. And I think it's just because they don't want to potentially lose the money in the event that the sale didn't go through and not get paid back by the buyer. But here's the other thing. If the sale doesn't go through, you are still responsible for this appraisal price or the cost. So you still have to go back and pay it. If you back out after this point, or if something happens, you still have to go and reimburse the lender or the broker. So appraisal reinspection fee. So sometimes when the appraiser goes out, our nice little seller forgets to put on the electricity or the water or the gas or whatever they do to make us crazy, and they have to be sent back out. And also, like I was saying before, if the appraiser goes out and sees that there's damage to the house or repairs that need to be done, those things have to be repaired, and then the appraiser has to go back out, sign off on the repair, making sure that it's done, and then submit their appraisal back. So that if they have to go back out, it's usually about $100, $150. Usually that just rolls right into your closing costs as well. So it's typically not an out of the pocket expense. Now, all of your inspections though, those are out of pocket expenses. So I didn't say that before. Be prepared for those out of pocket inspections. Those are not covered by closing costs. Those are on you. Sorry, I'm still not feeling 100%. Okay, so unexpected repairs. Okay, like I was saying, in some cases, the appraiser goes out and there is something about the house that is just not, they're not going to sign off on it, whether it's like super big cracks in the foundation that they just cannot sign off on, or the roof is leaking, or something major going on that really has to be addressed, that would either create a problem for somebody's health or the structure of the house or something like that. The appraiser cannot sign off until it's repaired. Sometimes the seller cannot afford to repair it, and sometimes the buyer ends up paying for it, paying part of it, stuff like that. It does happen. Although hopefully you don't buy a house that's in that bad a shape, but sometimes it happens. Like right now, I have a couple that loves old houses, loves them. And I mean, the house that we put an offer on, the roof, I think you can even see a dip in the roof. They want this house. So, I mean, we've gotten through it, but the appraiser did come back saying something about the roof, and we had to get an additional inspector, which is usually what they want. We had to get a roofer to go out and say that it's not leaking and it's structurally okay. Like we can move forward. So yeah, but sometimes you can't expect some repairs. Right now, I do have another one that the foundation is having to be repaired before we can close. So big dollars, but the seller's paying for it. Thank God. Okay, any questions on that?
We do have a few questions. I'm not sure if this is, I'm just going to ask the question. How about that? Is there a hidden cost with USDA loans?
Yes. Well, okay. So USDA loans, they are more complex. I've done one, okay, in 10 years. You have the same types of things. You have the same, but I want to say that they cover the majority of the expenses. I don't think they cover your inspection, but I think they cover the majority of your, like, they definitely cover your down payment. I want to say closing costs are either covered or the seller pays closing costs, but that's a really good loan option if somebody is not, maybe hasn't had a, great work history or not a good credit score. Great program, really great program. But there are some stipulations, like the inspection report has to go to them and they decide what repairs are made. You don't. So it's a little more complex. The process takes longer, but yeah, that would definitely be another video just on that loan, or you know what I'm saying? Because that's a more complex loan. You have to go to classes for it, all kinds of stuff. So, but yeah.
That's very specific. And I think it's always great to kind of reach out to the companies, give them a call, and they'll be, and sometimes it's also on their website. So just kind of doing a little more research there.
Yeah.
Erica has a great question. If any repairs have to be done after the home inspection, do they have to be done before the appraiser comes out?
No, they don't have to be done before the appraiser comes out, although sometimes they should be. If it's like a structural thing, like a foundation repair that needs to be done, or a major roof repair because it's leaking, then I would recommend getting the seller to do that before the appraiser goes out. Because if the appraiser sees that it's a problem, they're gonna mark it and they're gonna have to go back anyway. But if it's just standard small little repairs like, a leaky sink, or little things like that, or the drain isn't working right on the tub, like the appraiser is not going to see that. So the seller has all the way up until your final walkthrough. So here in Louisiana on our contract, it says that you have 5 days. So within 5 days of closing, you go back out to the house, you bring your list of all the repairs that you requested the seller to do, and you check off and make sure that they were done. Now, typically though, whenever those repairs are done, I make the listing agent send me receipts. I want to see that it's been done. Like, I don't want to just go out there and go, oh, I wonder if this electrical works. No, I'm not going to do that. I want to see a receipt. So like, usually I'll try to get the receipts from the agent, and you can request that too, just for peace of mind. So I hope that answers that.
Perfect. It looks like we're good to proceed. You guys.
Let's go. Okay, add-ons. So this is pretty simple. We're almost done. Home warranty. So whenever you're making an offer on the house, you can also ask for a home warranty. You can ask for the seller to pay for it, or you can just say that you're going to pay for it yourself, depending on negotiations, how negotiations are going. If you feel like the seller might pay for it, good. If you feel like they won't, you might want one. So a home warranty basically covers all the systems in your house. It'll cover like some electrical, it'll cover your AC and your heat, it'll cover some plumbing, just a lot of your hot water heater, things that might go out. So a basic plan is about $500 per year. So if you get it, it's going to last. I mean, it's the contract will last from the date of closing to another year. And it'll cover all those major systems. Now, if you want to put add-ons on top of that, like you want it to cover your fridge and your washer and your dryer, and maybe you have a pool, and maybe you have a septic and all these extra things, then it can start tacking up, expenses or onto that $500 base plan. But it's typically about $500 for a base plan. And then just, depending on the add-ons that you want, it can get higher, and it covers you for about a year. And of course, that usually just kind of gets rolled into closing costs and rolled into the whole, or your down payment or whatever. So it's not something that you're going to pay separate out of pocket. It's something that's going to get paid for in the whole, either the closing costs or the down payment or whatever. And then owner's title insurance. This is another add-on. It's not required, but in some cases I recommend it. So what title insurance is It's coverage on the title itself of the house, or any liens that might pop up later that you weren't aware of, or that they didn't find whenever they pull title. So when a title company goes and they pull title on a house, they're going to go as far back, like to when it was just dirt and who, however far back they can find in the courthouse, and they're going to bring you a list, they're going to make a timeline of who owned it, when it changed hands, blah, 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 all the way up until now. And what they're trying to figure out is if, that who owns it is supposed to own it, and that everything is clear and done right and perfect, and there's no liens on the house and things like that. But in the event that, say, there's some successions or foreclosures, or there were tax liens on the house or whatever, then, the title insurance would cover if something came back to bite you later that wasn't visible or evident whenever they were pulling title. And one just easy example would be like, if some, grandma's cousin's uncle, they had a piece of paper and it was, they had the notary come out and stamp it, but they didn't go record it in the courthouse. And then, 20 years later, they come back and they say, oh, well, I have this paper, so technically I'm supposed to own a portion of that house or whatever. It would cover you in the event of that. The lender requires that you pay for title insurance. It's lender's title insurance in the closing costs, so they're covered, but you're not necessarily covered. So if it was, I always recommend, if it's a succession, foreclosure, if you're aware of liens on the property, if it's changed hands many, many, many times, and it's not just like one owner or two owners, then yeah, I would suggest getting some owner's title insurance just in case. It's about $500, and usually if you buy it for yourself, then it'll decrease the cost of the lender's title insurance, because then it's not so much on them, so it kind of evens out a little bit. But yeah, I mean, it's nice. I've never seen anybody have to use it, but I mean, hey, it could happen, so it's just like insurance. But yeah, so any questions about that one?
No, it looks like we are good and clear there.
Okay, good deal. Moving on. Let's see what else we got. Moving expenses. Yeah.
The fun
Yeah.
stuff.
This we all know about, because we've all moved before, right? Even if you had an apartment, or even if you were moving out of your mom's house, you know what that's about. So utility deposits, certainly you can always call ahead of time to the different utility companies and find out what those deposits are going to be. Here it's about $250 per company. If it's water, it might be like $50, but it's usually based on what an average monthly bill would be on those. But yeah, definitely make sure that you have money for your utilities, your deposits, permits. Okay, some, like here in Louisiana, there are some parishes that require a permit from the health department, especially if you have like a septic system, like I was saying before about how it has to be in good working order and, not a health violation. Well, they'll also make you go and pull a permit. So you have to bring the document saying that your septic system works and that it's in good working order to the permit office. And then the permit office will make you pay another permit fee, like $25. And they give you this piece of paper. Then you take the piece of paper over to the electric company, and then they'll turn your utilities on. But until you've actually proven to the permit office that your, septic system is in good health or whatever, they won't turn your utilities on, which, I mean, I guess is fair, but it also can make it difficult sometimes. And then of course, moving costs. I mean, are you going to be out of work for a couple of days? Are you going to rent a U-Haul? Are you going to hire a moving company? I mean, the moving costs can be all over the place depending on how much stuff you have, and then also your HOA fees. So, one of the first houses, well, actually it was the first house that I ever bought this house, moved in on my birthday. I was so excited that I slept on the floor on the carpet with no bed the first night, just because it was my first house. Okay. And I don't even know, it might've been the next day, the head of the HOAs knocking on the door, looking for her HOA fees. So yeah, if you have HOA fees, they're going to be looking for them whenever you move in. If the seller hadn't already paid for them in advance or something, they're definitely going to be looking for those. Any questions on any of that?
Let me see if we have anything pouring in. Okay, Therese. Hey, Therese. She wants to know, are there any considerations for buying second home? So because it's your second home, are there any additional fees that might trickle in just because of that?
Not necessarily. The thing that we always, the thing that we're always worried about is timing when it comes to buying a second. Like, so if you're selling your first home and then you're buying another one, we as agents are trying to get it done on the same day. And sometimes, that's difficult because we have to make sure that you're out of your house and ready to give over keys. And then the next person's out of their house and you're ready to move in. So, sometimes you're driving around in a moving truck for like a few hours.
Yeah.
But I don't, not that I can think of off the top of my head. I don't think that there's any additional cost involved in that. It's just a timing thing. We just have to coordinate to make sure that it all goes smoothly, pretty much.
Okay. All right. We have a few questions pouring in, and it sounds like the moving expenses were very clear to them. They're kind of jumping into some of the previous topics that we've covered. And these are really great questions. Patricia wants to know, how do you research the ownership history of a house or property you're interested in putting an offer on?
You don't. They have title researchers that go and do that. The title companies do it. I have tried to do it on my own before, and no, it's like you darn near need a degree to figure it out. And I had to try to do it on a property that a friend of mine was trying to sell, and because we didn't really know where the property lines were and stuff like that, so I had to go find like one of the original plats, and it was like from 1905. And I mean, these ladies in the office are in the courthouse are looking at me like, you don't know what you're doing, do you? Like, and they're like, do you have this number? Do you have that number? And I'm like, what is that? So yeah, you don't have to worry about that at all. That's what the title abstractor does. They get paid well to do it. So yeah, the title company sends out a title abstractor that is very well versed on how to do that, and they go out and they do that whole line. And they're required to make sure that it is accurate. So the only time, like I was saying before, that the title insurance would come up as being needed is if maybe there was a document that wasn't recorded that they could not see in that line. But yeah, I would not know how to tell you. You'd have to take a course on how to do it. It's not easy. No.
Yeah. So as long as there's professionals and experts out there to do it, and they're already getting used up,
Yeah.
take that stress off of you. So the minimum down payment on a house, I know there's been, I know for conventional loans, it's usually like around 3%, but you always hear 20%. What would you say is usually the minimum for a down payment?
On a conventional loan is 5%. So if you're just talking about conventional loan, it's 5%.
Mhm.
And the bank wants 20% on a conventional loan. So whenever you only put down 5%, then you're going to be paying private mortgage insurance on that 15% that you haven't put down. So until you have paid down your mortgage enough that you've covered that 20%, you're going to be paying an extra fee that you don't necessarily, it's just an extra fee that you don't want to necessarily have to pay. So as soon as you're done with that 20, paying down the 20%, you want to talk to your bank maybe about either getting rid of the PMI or refinancing or whatever, so that you don't have to pay that unnecessary fee. But again, it depends on the type of loan. Like a rural development loan, or like the lady that asked about the USDA loan, zero down, nothing. And then on FHA loans, that's 3.5% down. So you have 0, 3.5% down, and then 5 to 20 or more. And then also on the FHA loans, I don't know about where you are, but I know that here in Lafayette, in the city of Lafayette, we have all these extra like grants. So if you don't have the 3.5% down, you can apply for a grant and they'll cover it for free. You know what I mean? And then there's some that's like a grant and you have to pay for, you pay like $65 a month to cover it's like an extra $65 a month on your note, but it covers your down payment. So you'd be surprised the options that are out there. And that's why I recommend going to a mortgage broker, because they know all of those options and what's out there for you. So there's lots. There's more people that are surprised that they can get pre-approved and that they can actually buy a house. Then like when they get pre-approved, they're like, oh my God, I can't believe I could buy a house. Yeah, you'd be surprised. Yeah, there's a lot out there. Oop, I can't hear you.
Sorry, I've been keeping myself on mute because I've been coughing left and right, trying to
Oh,
all that. But there are a few questions about HOA fees. Can you give us a ballpark, like an average of what that could possibly be? And
okay. Well, I mean, it really depends on where you are and it depends on the neighborhood. Like here in Louisiana, that we have a lot of small communities and they might have like a little pool and like a little playground and some walking paths and just a sign in the front and the HOA fee, it covers them to like cut the grass and keep the pool up and the insurance up, but for people playing in those areas. And it might be $250 a year. It could be like $40 a month. If you're in California, you could be paying $200 a month. It really just depends on the neighborhood that you're in. And not all neighborhoods have HOAs. I mean, like older neighborhoods usually don't, they usually don't have an HOA and you don't have to pay any fees. Newer neighborhoods, like newer construction neighborhoods, sometimes they have an HOA, sometimes they don't. If it's not a neighborhood that has like central things that are shared, like a pool or a playground or, like the sign in the front that they go cut, then a lot of times there's no HOA at all. So if that's not something that you want to pay, then you just tell your realtor when you're looking for a house, I don't want an HOA. I don't want to pay HOA fees because that's more money on top. It's more money on your note every month that you have to pay. So if you don't want to pay it, just don't go into a neighborhood with an HOA. Pretty much.
And I love that you said that is like really kind of knowing what you want before, like what you want to pay or what you want to have in your development. If you have a development or kind of like a complex that you're in, kind of stating that to your realtor up front, that'll definitely save you some headaches. Oh, I lost my spot. Where was I? Somebody had a really good question. What's the best way to find out in advance about the regulations of owning a business when you have an HOA?
Owning a business. Oh,
At all?
okay. So if there's a particular house that you're interested in, all you have to do is tell your realtor that you want a copy of the restrictions. Okay. And it's, it's a legal document. It's usually about 60 pages, but they're supposed to give it to the homeowners anyway. So somebody's got it on file, probably like the HOA, they probably have it on file. And you just email it over to them and read it. And some of them do say like, you can't have certain types of businesses in, like, because I know a lot of people want to babysit in their houses. That's very common. And some neighborhoods don't want you to do that, or they don't necessarily want you running a business. Most neighborhoods just don't want you to have a sign in the front and have people coming in and out all the time. But I mean, I work from home, so you just read that, and it should have some area in there that is specific to that kind of thing and what's okay and what's allowed, what's not allowed, that kind of thing. Yeah. Good question.
Yeah, very great question, because I know a lot of our audience are interested in, whether it's a side hustle or a business you're starting or whether you're established in your business. I just think that was a great question to kind of ask and consider. And I never knew that you just asked for this document. So that's amazing to know.
Yeah.
Gemstar, I think this is a great question. What is the best way to buy a city-owned property?
A city-owned property.
Would it still be the same process, or do you still need a real estate agent for that? Do you want clarification from her? Teresa's like, wait.
Yeah. Give me a little more detail, because I don't know. Because here, when I hear city-owned property, it's usually because they took it, like because they're about to build a highway and the city took the property and it's not going back. Like they're not going to sell it. But if it's something that's, and please clarify, it's definitely residential and it's on the market. Yeah, just kind of give me some more deets and I'll try to explain.
Okay, and then the final question for the evening, unless we might get one more to get clarification on this question that just passed, but Athea wants to know, are there search engines to go over stigmatized properties or anything falling under Megan's Law? Megan's Law,
stigmatized. Oh. Not that I'm aware of. You're talking about like if there have been deaths in a house. So some states don't require that you, like in Louisiana, we have no idea. Nobody's required to say whether or not someone's passed in a house. But I know there are some states that do, but I am definitely not aware of any particular search that would do just that. Now I'm curious.
Me
Like,
too.
is there, somebody's got that somewhere or trying to.
Yeah. I mean, somebody in here, you might want to start that list.
Yeah, there you go. New business.
All right. So final question. Carrie wants to know, what is the typical time frame to buy a house? Because I mean, you hear the horror stories and then you also hear these like really good, smooth stories. But if you're like in an apartment and you have a lease, it's just like, how can you kind of plan out the transition?
Okay. And I think I have a couple more slides. I'm not sure. So I just,
No worries, no worries.
okay. I just didn't know if we were out of time or what. Okay. So typically I would, and again, it depends on where you are and it depends on the market. Here in Lafayette, I mean, if you're moving from an apartment to a house, I would say that you want to start at least 2 to 3 months in advance to start looking, because you want to have some time to look. Of course, we have like so much on the market. It really doesn't take people very long to find something here. Okay. So usually within 2 weeks, we found a house and we're putting in an offer. From contract, like from the offer to the closing date, when you get your keys, it's typically 30 days, but we say 30 to 45 because some loans like USDA or rural development, sometimes they take a little bit longer. Sometimes you have little hiccups along the way. Sometimes you have repairs. So I would say 30 to 45 days. And this is very beneficial to people who are renting. Say you close on, what's today? Or let's say, all right, we're in February. So say you close February 4th. Well, you are not going to pay your note on March 4th. They give you a free month. So you will pay April 4th. So that gives you a whole extra month before you even have to pay your first house note. It gives you a grace period. So for people that are, trying to time, like having to pay a house note and, nobody wants to pay a house note and the rent at the same time, you get a grace month. So it gives you some extra time in there. So definitely, I would say start at least 2 months in advance if your market has tons of properties on the market. If they don't, start 3 months in advance so that you can start getting ready and waiting for that property to pop up to make an offer. And then expect about 30 to 45 days to close. And then also anticipate that on the day you close, you won't pay the next month, you'll pay the following month. So that gives you quite a bit of time before you actually have to pay your first note. Okay, good deal. All right, I'm going to move on. How are we on time? Is it okay if we keep going?
Absolutely.
Oh, okay. All right. I'm not even sure what else I have. It might not be much. Oh, okay. My recommendations. Okay. So my recommendations is to meet with a mortgage broker now. Basically just because you need to determine what your financial position is now. You need to come up with a plan of action now. So if you're planning on buying in a year and you're not really sure, what your financial situation is, I would go start talking to a mortgage lender now. Because a lot of people, they're like, oh, well, if I do this and if I pay off my car, then it's going to increase my credit score. No, don't do that, because sometimes it hurts you. So talk to the mortgage lender first, get advice from them on a game plan, let them know what you need, like to save and to save up for whatever period of time you need, whether it's for a down payment, for closing costs, for, if they want a cash reserve, for inspection, all that stuff, so that you have time to save that money. And also so you have time to take some direction from this broker on what you need to do to get your financial situation just in order for the, for what you want. Also start talking to a realtor now. Here's why. Because if you can, one, get set up on a search for houses now, like in the price range that you're wanting to be in, it gives you an idea of what those houses are really like. Because sometimes I'll have first time home buyers and they'll be like, we want a house that's $100,000 because we know exactly what our note's going to be. That's what we want. I start sending them $100,000 houses and they realize real quick they don't want $100,000 houses because they're, half of them don't even have a roof. No, I'm just kidding. But they're like, they're in rough condition. So it starts to give them a mental idea of what to expect in that price range. And if they want to start making adjustments, then they can start talking to their lender about how to make those adjustments now instead of, being stuck with having to get some really junky property or a property in an area they don't want to be in or whatever the case may be. And then also so that you can start kind of learning about the process, so you have somebody to go to and ask questions. And I mean, typically if it's a good real estate agent, they're going to want to answer those questions for you because they know that in 6 months or a year, whenever you're ready, you're coming to them to buy the house. So and that's part of the reason why I created that video series, is because I get so many questions about the process. So I love doing those videos because they really help first time home buyers. Don't make mistakes. Mistakes can cost you money. So definitely listen to your lender or mortgage broker, your realtor. Be aware of deadlines and things like that, because if you, like, say you missed your inspection period deadline and you didn't ask for repairs, guess what? You're stuck with the house in the condition that it's in. Now, I would then tell you also that you have a terrible real estate agent, because it's their job to make sure that you get it done in time. But I have seen some lazy real estate agents that don't care very much. Of course, definitely make sure you have a good real estate agent, and then choose smart. My best suggestion is that when you're going through a house and it looks clean, well kept, it looks like they took care of things when they broke. Maybe on the listing it says new AC, new roof, new hot water heater. That buyer has been taking care of the house. You don't see cracks in the foundation, in the floor. You don't see cracks on the walls. You don't see cracks on the exterior. You don't see leaking in the roof. You want to try to choose houses that look like they've been well kept and clean. And I mean, if it's really clean and it looks well kept, typically when you go through the inspection period, you're going to have a lot less problems, a lot less repairs that need to be made, a lot less inspections that you're going to have to put yourself through. And then, like, another thing, like, I would hate for somebody to go through an inspection, find out that there's something really wrong with this house, and then have to back out, and you just paid $350 to $500 on an inspection. Then you got to go find another house and pay for it again. So, my recommendation definitely on that is to be smart. Like, look for houses that look like they're in good condition, for sure. And let's see. I think I might have one more slide, and then we can ask a million questions. Oh, wait. Let me, before I do that, I forgot what I was going to say now. Oh goodness, what was I going to say about it? But I mean, overall, I just want everybody to make some smart decisions about what they're doing and not get themselves into a bind. If I think about what I was going to say, I'll come back to it, but we'll keep moving forward. So if you want to find me anywhere, these are, I would absolutely, if you email me or message me on any of my platforms and you have questions, I'll absolutely answer them. If you have good questions, I'll make a video about it. But on my website, on teresapastor.com, I do have a video series. So if you go to video series and click on buyer, you can see the process of buying and all the videos that I have. And I just slowly add to it every week. So you can check that out. And then on Facebook too, I'm actually Teresa Pastor, Realtor Extraordinaire. So if you want to like my page and follow, you can ask questions on there too, and I'll try to answer them. And then my Instagram. But just so you know where to find me if you have more questions and stuff like that. And I mean, I think that's pretty much it. Yeah. So hit me with your best questions, all the questions. Good. Give me some tough ones.
I mean, you were amazing. It was so funny. You were like, should I keep going? Everyone's like, keep going.
Okay.
So much. And we just want to thank you. So, everyone watching, you can find the links that she shared also below the video inside of the Academy. We also have them posted inside of the Facebook group. And Teresa is the biggest sweetheart. She's really passionate about what she does. So if you do have any questions, she really means exactly what she says. So hit her up. Ask any questions you have, and she'll be there to support you. Even though she has 6 children, she just makes like you said, she's so organized and very well scheduled, and she'll make time to get you what you need if you have any questions. We do have 2 questions that just popped in.
I just remembered what I was going to say.
So go ahead, drop it.
Yeah, and it's only because I'm under the weather. Otherwise, I would not be forgetting things. But what I wanted to say is that best case scenario, I have seen people go in with no down payment, no closing costs, have the seller pay closing costs, have no down payment, like, or either covered by the rural development loan or FHA with a grant. They bought an inspection, and that was literally it. They paid for their inspection, they had repairs done or whatever, came to the closing table with $0. Okay. Like I can make some magic happen. So like you were saying, if you know what you need, and if the lender can relate to your real estate agent exactly what you need, we can make that happen. We have really creative ways to make stuff happen. Worst case scenario, you like my little couple right now that loves these old houses, and now we've got to have roof inspection and foundation inspection and yada yada yada. Like, worst case scenario, you can really be putting a lot of money out. But I just want to, let people know that even though all these things are there are ways to protect yourself from having to pay all these fees. Okay. And if you have a good realtor that's creative, you can get away with paying almost nothing to buy a house. So just keep that in mind. I know these fees seem so scary, but I swear to you, we can make some magic happen.
Wow.
So go ahead with the questions.
All right, we have, this page moves so fast sometimes. Would you make the same recommendations if you're looking for a property to use as rental income?
As far as inspections and everything? In
general.
What's that?
It sounds like it's just about any of the advice that you shared tonight on hitting costs. Would it still apply?
Okay. So investment property is a little bit different, and the process is a little more difficult because it's not the same type of loan. A mortgage and a lot of the things that we talked about in regards to down payment tonight had to do with residential purchases, like for you to live in. If it's a loan that is a commercial loan, which, or for an investment property, they're typically going to want like 25% down. And there's no grants and there's no RD loans for that kind of stuff. If you're buying investment property, then you're going to be putting down that 25% to the bank. However, one thing that if this is something that you really want to do and you feel strongly about, but you don't have the down payment, there are houses on the market they are willing to do owner financing on. And a lot of times you can get away with not much of a down payment. And the other really cool thing about that is you don't even have to record that in the courthouse. So in other words, it doesn't affect your credit. So if you want to go buy more properties, it's not showing up on your credit if you do an owner financing. So that's also a really good option. But yeah, typically you're going to pay a 25% down payment. Now, everything else is going to be the same. Inspections, all that kind of stuff, that's all the same. But your down payment is what will be different unless you can find owner financing. And especially if it's a house that's been on the market a long time and they can't sell it, owner financing may become very, exciting for the seller. So, you know what I mean? That's a good option.
Awesome. Thank you so much. And I want you all to know that Teresa has, she's mentioned it a few times throughout this session that she does have other videos, a series of videos, which they can find on your website and YouTube page.
Yeah. I don't know that my YouTube has a specific name, but on my website, it's all linked back to my YouTube. So,
okay. Yeah. So teresapastor.com is where you can go. Actually, Teresa, can you go back to that page that had your contact information?
Sure.
All right.
Yeah, so just teresapastor.com. Super simple.
And I'm sorry, go ahead.
Oh, I was saying they can also find me on Facebook too.
Perfect. And we'll also have you inside of our Facebook group. As you all know, we kind of have our Facebook after party where if you guys have additional questions or you want access to any of those links, there will be a post inside of the Facebook group. You can ask those questions there and Teresa will pop in to kind of answer those as times become available. Give her some time because it might take till tomorrow. It's a little late in the evening. Right. But once again, I just want to recognize all of you for jumping on this Sunday, taking the time to join us to focus on your goals of home buying and just being properly prepared. A lot of great questions tonight. And then Teresa, just thank you again for putting this lovely presentation together specifically for the Literature Academy members. I just asked her if she can share her knowledge with us and without hesitation, she jumped on in. And I mean, this was just a lot of great information. I also want to let you all know who are fairly new, we do have a 22-day home buying intensive inside of the Academy where it covers the entire process, but it wasn't as detailed as this presentation as far as hitting costs. And that's why we wanted to cover this today. So I can also share the links to that home buying intensive. It will talk about the different loans that are out there, including NACA. And there's 2 or 3 other popular ones that were covered in that session. You can also go inside of the Academy and just click on home buying when you're logged in under under intensives, and you will see that session available to you. And if you guys have any other topics as far as home buying or real estate that you would like for us to cover, and we can bring Teresa back to dig into those a little bit more, please let us know. We're always excited to bring this knowledge to you. And Teresa, again, just thank you for your time, and everyone have a wonderful evening.
Thank you, guys. I am so honored. Y'all have a great evening. I'm here for questions for a while. Bring them.
Good night, guys.
Bye.